Trading indicators as a form of technical analysis, they're an important part of the trading system and the strategy of a lot of traders out there. And whether traders are looking for a way to simply determine a trend or even a buy and sell signal, the indicator are usually the first line of offense that people use. And I know we hear that a trading indicator is a crutch, but in reality, there's nothing inherently wrong with a trading indicator. It's just a tool that can be used to frame your price and help a trader better understand what they're looking at. But you might not want to be trading just the indicator. You're not going to get a complete picture of the market if you only focus on the indicator. And I want to show you how price action can make you a more complete trader. Now, trading indicators, they lag price because they are a derivative of price, unless you're using a trading indicator that's based on volume, which would still be a derivative of price. But they're used by traders to interpret what price has done and what price could potentially do. Now, it's not a big deal, and those people that bash indicators and ramble on about the lagging nature of indicators, they have their own agenda. You don't need to pick a top or a bottom, and many traders make their money during the meat of the move. You getting in the market may be later than buying or selling at the extremes, but it's not a big deal. Getting out of the market while waiting for an indicator to give you the nod, that may cost you though. The bottom line is that the purpose of a trading indicator is to help determine a trading opportunity, a lack of a trade entry, and when to exit your trading position. And I tell people that I speak with to use what the chart shows you first and then the indicator second. And I'm going to point out two ideas. Okay, but don't think that's all that there is. You could read a book or three on the usage of indicators of all the different types that are out there. But for now, I'm going to stick to two ideas. Now let's consider the moving average trading indicator for trend determination, which is what many traders use them for. And at a glance, you know if the market's up or down according to what you determine accurately shows the current trend on the time frame that you're looking at. And this is just a simple 20-period simple moving average that can show you the trend in a few ways. If price is trading above it, you look for longs. If it's below it, you look for shorts. Now, not shown on the chart, but if price is crossing back and forth over the moving average, the chances are that you're in a consolidation, and you would not take any trades depending on your trading system, of course. Now, for consolidation, you might want to look at something like the Bollinger Band squeeze instead of using the moving average. And you can also use two moving averages and the crossover, which would highlight a pending trend change if you need a little more confirmation and objectivity in your trading. Here are the 9 and the 20 simple moving averages, and I've just placed arrows where they cross over. And you'd be looking for longs when that thin line crosses to the upside of the thick line, and shorts when it crosses below the thick line. I've also placed a yellow box where you'll see the two moving averages converge. Now this indicates the potential of a consolidation, and you may opt to play a breakout from this zone. And you can play each and every cross of the moving average, but trading, it's not that simple. You can use the information a technical indicator gives you, along with basic price action trading knowledge, to start to form a more workable trading strategy. Now this is the same 920 moving average chart from before, but here we're looking at some basic price action in relation to the trading indicators. At number 1, we crossed the downside, but price action has not registered a lower low after the lower high. So we would not be looking for shorts, even though the moving averages have told us to either short the cross or trade a pullback to go short. Reading price action allows us to ignore the lagging nature of the indicator and save ourselves a potential losing trade. At number 2, price action is showing low momentum into the peak, and we can short a break of support before the moving average crosses to the downside. And if you're waiting to trade a rally short after the moving average cross, it takes almost 2 weeks before we trade into the 920 trading zone. At number 3, the moving average converge. We can clearly see signs of a consolidation after the shadows put in a higher high, preventing a short trade. The red line indicates a smaller range inside the larger range, and a break of the smaller trading range front runs the larger break. At number 4, an obvious reversal candlestick that pushes into support from the left of the chart. The inside bar that follows could indicate a long trade, depending on your current trading strategy, and go long before that moving averages cross over. And you can see that using a technical indicator combined with price action offers a more complete way of approaching your trading charts. And with that, you hope that your probability of trading success in the long term increases, and you begin to take trades that have a higher odds of giving you some traction into positive territory. Now, indicators can offer us an objective look at the market, and for most of us, that can keep us from doing stupid things. But you just can't trade them in a vacuum. Now, even though our trading systems use trading indicators to frame your opportunities, the trading plans provided hit home the importance of trading adjustments around structures such as support and resistance. And you've seen how using simple trend structure can keep you from just blindly shorting a Forex pair, for example, giving you a losing trade. You've seen how price action showed you consolidation, which stopped you from taking a pullback trade to the downside. Now, don't underestimate the power of combining a lagging indicator with present price action. It can save you some grief and really offer you up some stronger trading opportunities. And we want to show you how to combine trading indicators and the art of trading. So here is a link to a free trading room that we have here at NetPicks. And as a gift to you, come aboard for 2 weeks, check it out, and see how trading indicators combined with the art of trading can help put you on the path to success.